Paul, good to have you with us on Closing Bell. Let's kick off with the Reunert story. What are your thoughts on that? They're looking to sue their ex-CEO.
Big fight. So not an ex-CEO. Just to clarify the deal, Reunert bought a business called ECN. Now ECN is one of the leading suppliers of least cost routing, network support, that kind of thing. So they would go to corporates and they would say, let us take over your telecoms and we'll route it via our internet network, which will save you lots of money, and then we'll share the savings. Very successful company. So Reunert bought that for about 172 million rand. The CEO, John Holdsworth, was then subject to a restraint of trade. He then left, and what did he do? He went straight out and started a new business, which is called AppChat. So what it is, it's a thing where you are on your iPhone or you're on your Android phone, you download a little application, you pop it up, and then it uses a web connection in order to fulfill a telephone chat, which is interesting because that's where all of this stuff is going, and that's why the phones and the apps are such a threat, but it's fun when there's a fight going on. So Reunert is now suing him, saying he's in violation of his restraint of trade,
Clearly is in violation of his restraint of trade, and also, well, I suppose that's for the courts to decide.
Depends what the lawyers, everybody will be telling themselves that they're in the right, and he's probably going to argue that this is not a telco business. This is, some other kind of internet-based application type thing. But it's indicative of a way, through this little human drama, of the way that the telco space is shifting and how things are kind of not what they seem. Fun.
Okay, so let's look at the JSE overall. It's been earnings season. Capitec is coming out with their results tomorrow, so we're all looking to see what the unsecured lending space is looking right now. But overall, and the health of that. But overall, what would you say the health of the South African company listed on the JSE
well,
is?
Very, very positive. David Cart wrote an interesting article which has been published on MoneyWeb this afternoon. People should go and have a look. Basically, what he's done is he's looked at the quality of earnings reports that we've seen so far for the December period. So clearly there we're talking about companies that had a year end ending in December, or companies that had 6 months ending in December, and he looked at the percentage year-on-year increases for 62 listed companies. What he found is that 32% of them had earnings that were at least 20% higher than the previous period, and a full 17 of them had earnings that were more than 40% higher.
How much is this around the base effects, and how sustainable is this? Because isn't that a question? And I know that you're going to look into your glass ball, and it's a hard question to answer, but what is your sense?
I guess the most important point here is to talk about what people's expectations were 6 months ago. So 6 months ago, people were still saying, this is a terrible market. You'll remember the market fell. The stock market fell like 30–40%.
And so did the rand.
Looked terrible in August last year. There was a big slump. And a lot of people were saying the economy looks horrible. The economic numbers are terrible. The business out there is tough. People are not seeing any kind of repeat business. Well, guess what? As the year closed, we then rallied. And as the year opened, we've rallied even harder. And now it becomes apparent why that is the case is because people were reporting earnings that were much stronger, either through higher sales, better margins, or lower costs. So I guess it's the old story, and that is that the share prices move, and then the reasons for the share prices move arrive afterwards, and in this case, it's the very strong numbers.
Yep, that's a very interesting point, and of course that article on MoneyWeb. That's it for today. Paul Theron, of course, from CEO of Vesta.